Of course it's great that Bitcoin is above 100k again. But the entire Bitcoin and crypto market right now is driven by two things: macro factors and when Saylor is buying. Everything else just follows. To understand this correlation, let's first compare the stock market with the inverse of the yield, 1 divided by the US 2-year yield. And you will see here that for the past 2 months that has followed exactly. Yields go up, meaning the inverse goes down. Purple line, stock follows in the same direction. Past couple of days yields have dropped, meaning the inverse goes up. Stock market has followed. If we then switch to Bitcoin, during the past month we have seen the same thing. Purple line drops, Bitcoin drops, purple line goes up, Bitcoin goes up, purple line drops, Bitcoin goes down, and past couple of days, purple line up, Bitcoin up. We can see the same thing with the DXY, the dollar strength index. You can see how correlated these two have been on daily time frames over the past month. And we can also clearly see, if we overlay stock prices over Bitcoin, how positively correlated these two asset categories have been over the past month. Factor number 2. Saylor buying. Saylor has done some massive buying, but his buying was a lot bigger up to 16th of December. If we go back a little bit here, 2 billion, 4 billion, 5 billion, 1.5 billion, 2 billion, 1.5 billion 16 December. Then since then 500 million, 200 million, 100 million, 200 million. So the last over 1 billion buy was reported on the 16th December, which was unsurprisingly around the time of the high. Everything else has just been noise. The Department of Justice dumping Bitcoin? No, they didn't. At least not yet. The BTC is still in their wallet. Retail investor demand has been discussed a lot. I don't think it matters. And it hasn't been a valuable indicator anyway in the past. Green peaks, retail tend to get excited just before each top. So I don't think this peak here and this drop here matters at all. So I will only look at 3 things from here. Are yields breaking down again? Looking at the 10-year yield, this is a change in market structure. Is DXY topping out? Number 2, how much is Saylor buying? And number 3, the chart, the price action. I'll come back to that later in the video. First, I want to talk about altcoins. I shared with you in the previous video that I opened new positions for BTC at support and Solana at support. I didn't see many people doing that. A lot of people were calling for lower. Today, I don't hear anyone laughing. It's like Caesar Parabolit has said since at least 2018. Everyone's a gangster until it's time to put buy orders on support. It's harder than it looks because when price actually dumps into where they want to buy, most people bitch out and expect lower. Everyone's a gangster until it's time to buy support. Learn support and resistance, folks. Now I will talk about the nature of the altcoin game. Trading crypto is just like football. If you just run and shoot the ball at the goal, of course you could score a goal. You might not score more than the other team, but at least you have infinitely higher chances to score than the guy sitting at home in the sofa. So that's step 1. At least get out of the sofa and try. Step 2. If you then also practice consistently, every day you put your shoes on, you go to the field and you practice, your chances increase dramatically. But only if you also, step 3, understand the nature of the game and have some kind of tactic. Your team has a reasonable chance to win at any level. You need to have a goalkeeper who cuts your losing positions early. You need to understand that if you spread out, pass the ball to each other, it's easier to score a goal than if every time you get the ball you just run towards the goal yourself. Spread out, use position sizing. And you can't be lazy, just standing at the goal waiting for the ball to arrive at your feet, because there's an offside rule. You need to actually do some work. Same here. You need to understand the nature of the game of highly risky market speculation with asymmetrical returns. Let me show you exactly how it works. As you know, I launched the Pro portfolios to assist in identifying favorable risk-reward setups. Based on technical analysis, based on my own analysis of the project, based on community contributions, and so on. I started tracking this at the worst possible time, on December 6, exactly as altcoins topped, and exactly at the bottom of Bitcoin dominance, before Bitcoin took back control and smashed the alts. Further, I didn't identify any of the biggest winners in December, and Bitcoin faked over 100k twice. So worst possible market environment. It basically starts snowing on the football pitch and you forgot your spike shoes at home. Then here comes understanding the nature of the game. Most of the setups, good risk-reward setups, didn't work out this time because Bitcoin dumped and Bitcoin dominance pumped. Whatever support there was, whatever setup, didn't hold usually. So in this tracking I had to cut many of those at minus 10% on average, I think. Some a bit more, some a bit less. But then one worked out. Cookie, which went 5x. The percent here is just because I enter it at 1 to keep some easy tracking of it. And then the bizarre thing is that one cookie that goes 5x pays for 50 entries that don't work out and loses 10% each. 50. 50. That's the bizarre, unintuitive mathematics of asymmetrical returns. Here the analogy to football, or basically anything in the physical real world, stops. You get one lucky kick and you score 50 goals. That's why this whole thing is still up, even though the market was a disaster, a cascade of fakes. And altcoins are still down quite a lot since the beginning of the tracking, and almost nothing worked out this period. Still, I mentioned this briefly in the previous video, but there were a lot of questions. I feel I didn't explain it well. Asymmetrical returns, folks. But if you don't manage your positions, if you don't cut your losers early, because many times there are legitimately great setups, they just don't work out. Then if you don't cut your losers early when they break support and you get stopped out, and instead let that 10 or 20% loss become a 99% loss before you sell, basically just to stop the pain of seeing that in your portfolio, then this probably won't work out for you. Cut the pride, cut the positions, cut the losers. That's the nature of the game of asymmetrical returns in very high risk assets. If you want to hold on something just for fun, maybe you like the NFT profile picture or something, then make sure you book it as for fun and nothing else. Next, even if you've practiced out on the pitch diligently, learned everything about football, you can still lose. It's the same with investing. There's no guarantee, guys. You always have a high risk to lose the game. In football that's kind of obvious, but a lot of people just forget it in investing. Realize that and don't play this game with money you need. Really don't. You need to be able to distance yourself from it and see it as a game to have any chance to stick to any tactic. In terms of TA, it's Bitcoin driving the mood of the market now. And of course it's great to see us above 100k again, but there has been sell pressure and resistance here before. It faked twice. And the previous head and shoulder invalidation here got reverted almost immediately. Despite the fakes, I will still rely a lot on this chart. And we can still get the head and shoulder invalidation. Then price now needs to break above 102,800 or maybe 103,000. If that happens in a strong uptrend like this, Larsson line gold, that is a strong signal. And despite the fakes, we have so far always come back for another go, not reverted all the way back down. And if you can now get some support from macro and some bigger Saylor buys, this could get very nice. Don't get scammed, guys. A lot of impersonators out. If I'm sending you a DM about some great investment opportunity, it's not me, guys. One letter will be different in some username if you look carefully. Breaking: Chinese hackers accessed Yellen's computer in US Treasury breach. Elon Musk. Maybe she clicked on the send me one BTC I send you 2 BTC email. Maybe a Bitcoin reserve isn't such a good idea after all. I have only one website, it's ctolarsson.com. Press here for course with Larsson Line, press here for Larsson Line Pro. Thank you, tack. CTO Larsson out.